Welcome back. You're watching Editors Roundtable, and we, of course, have two doyens of financial markets with us, Madhu Kela and Sunil Singhania. Before we ask more questions, let's go across to Nimesh, who's standing by the big wall, and he's looking at some big mid-cap movers and shakers for the year, both in terms of themes and individual stocks. Nimesh, what do you have?
You know, Anuj, the reason I've picked up the mid-cap and small-cap is largely because both our guests, Madhu and Sunil, have been champions in identifying the right winners and exiting the losers as well in time. So that's why I've looked at the mid-cap and small-cap somewhat to somewhat. Let's first look at the NSE mid-cap index. The index is down just 1.5%, but within that, there are lots of winners and losers to identify. So look at the winners list first. In the likes of Sri Renuka Sugar, Raymond's, Shoppers Stop, Karur Vysya Bank, KPIT, Mazgaon Dock, so many of these stocks are up between 130% to 64%. So that's the largely a mid-cap winners list. Look at the losers list within the mid-caps as well. Something like a Lux Indices is down 57%, Manappuram Finance is down 51%, Metropolis is down 49%, the likes of Sterlite Technology down 41%, IX is down 43%, and the likes of Jubilant Pharmova, even that stock is down almost 50% in the mid-cap space. Now look at the small-cap index. The Nifty small-cap index is down 12.5%. But if you look at the winners list, that will show a big surprise. You know, look at the winners list now. Mirza International is up almost 3x, almost 4x. KPI Green Energy is up 3.5x. The likes of NDTV, specialty restaurants, even like a GMDC is up almost 95% in the last 1 year, and someone like even HBL Power is up 120%. So that's a big list of winners as well. Now look at the losers in the small cap universe. Dhani Services is down 75%, Solar Active is down almost 68%, Dilip Buildcon is down 65%, likes of Strides Pharma is down 44%, Indiabulls Real Estate is down 51%, somewhat to somewhat in this Diwali. So that's the mid-cap and the small-cap list for you. I've also looked at the IPOs of this year. You know, if you look at the IPOs, even there is a big divergence. The likes of Adani Wilmar is up 161%, Veranda Learning is up 112%, Venus Pipes is up almost 100%, Go Fashion is up almost 100%, and Data Pattern is up 80% in the last 1 year. But there have been big losers as well, and the losers are largely coming from the platform businesses. Look at Paytm, that's down 70% from the listing price. Fino Payments Bank is down 65%, PB Fintech down 60%, AGS Transit is down almost 50%, and MedPlus is down another 47%. So the big learning is, even in the mid-cap and small-cap, you have to identify and back the right winners, is what Madhu and Sunil do every now and then, and that's why I put out that list. Now Anuj, you should ask them as to how you should identify the winners in the mid-cap and small-cap.
Oh, absolutely, Nimesh. Thanks a lot for that. That's a very exhaustive list that Nimesh put out. Of course, you both have had some stocks in that. We'll not go there. But Madhu, one interesting thing which he put out was the new age companies and all the listed stocks from there. They have actually seen quite a bit of wealth erosion. You know, whether it was Paytm, Zomato, of course, was not there, but that's also eroded quite a bit of wealth after a good listing. PB, Car Trade, which is supposed to be some really good businesses. What's happening here?
At least once I can say that we said it so. At least, we've been I think both have been very, very vocal. That, it's not about a good company or a good business. Finally, in the stock market, it's about valuation. Yeah. Right? What value you are paying for any business and the valuation at which they are coming. कुछ लोग यहाँ देखते हैं, कुछ लोग यहाँ देखते हैं, कुछ लोग वहाँ देखते हैं. तो ये इनके इन्वेस्टर वहाँ देख रहे थे. So obviously, clearly we have seen that it doesn't really work. It doesn't work only in India, but what has happened in Nasdaq is even more horrifying than this. A lot of companies, very, very good companies, even companies like Netflix, were down 85% from the peak. Companies like Zoom Telecom, which was absolutely one of the darling at one point of time, was down 80% from the peak. So I think these valuations, Anuj, in my opinion, had to crack. Okay. Now the moot point is it the bottom or are there real opportunities here? I think, a lot of these companies are going in their lockup period. A lot of the stocks were being locked up. Some companies got listed 6 months back. Now the rule is being relaxed that they will be tradable after 6 months. Some were listed 1 year back. So you will see in the month of November, roughly $15 billion kind of potential free float will get created. Now going by what we saw in Zomato, right? Because when the stock went down from 160 rupees to 60 rupees, even the people who wanted to sell, they sold up to 40 rupees.
Yes.
Yeah.
right? And there was a huge volume and delivery happened in that period. So I am taking a bet that a lot of these companies, will come up for selling in the month of November. And a lot of these businesses are very, very good businesses. So I would be waiting and watching very carefully that if something really comes in our
pounce,
horizon,
basically.
absolutely,
Yeah.
in our horizon.
Sunil, just to take Anuj's point forward, especially to you, Sunil, I spoke about how the platform companies got corrected 70-80%. But even then, within the platform businesses, you've identified two winners which are part of your portfolio as well, Saregama and Route Mobile. So, tell us, as a fund manager, how do you differentiate between not to buy into Zomato and PB Fintech and go for traditional businesses where the valuations were supportive?
So I think whether it's a new age business or an old age business, the style of investing has to be old age.
Okay.
And invest in companies which make profit, where there is visible profit growth, and what you pay today will be more than made up by way of future profitability. I think if you follow that to the T, whether it's a new age business or an old age business, I think eventually you'll end up making money. So a lot of these businesses which have not done well, frankly, hats off to the entrepreneurs. They've created fabulous businesses. They've made our life easy. I think we all can't live without Zomato and the Swiggys of the world. We can't live without the Amazons and the Flipkarts of the world. But, the price what we were paying was discounted and profitability which was not even visible maybe 10, 15 years ahead. So I think that category of investors is very different. I don't think we are of that category of investors who will buy just because it is looking better and just because someone else will come and buy it higher than you.
And just because it is fashionable to invest.
In fact, what is fashionable is never, most of the time, never makes money. So I think you just have to look at the inherent, company. And more importantly, Nimesh, you have to look at companies which will not require further capital to survive. Right. A lot of these companies need further capital to survive. And in an environment, where private equity just dried up, if they don't get capital, I think they will have to lay off people and they will close down.
Right. Yeah. I think that's a big learning for the investor. That look for companies where they don't need too much of incremental capital to grow, and that's
not to grow, to survive.
To survive.
To grow is fine.
Right.
If you don't get capital, you won't grow. Right. They need capital to survive.
Correct. So what do you do at a time when there's not only a need for capital, there's a lot of cash burn, there's also so much competition coming through, right? For Nykaa, for example, or even the PB Fintechs of the world. Do you stay away completely, or do you still look for some value here?
You see, competition is a way of life. There will be nothing where there will be no competition, because human beings are human beings, entrepreneurs are entrepreneurs. If some industry makes disproportionate profit, there will be 100 others who will come in. We had one company called Jindal Steel and Power. They made 4,000 crore profit in one power plant. And I think India benefited because of that. There was 1 lakh crore of new power plant which was set up. So India benefited out of it. So I think competition will always be there. What you have to see is, what is the capability of the company and what is the strength of the company to withstand this competition. I think that is what is very, very necessary. But most important thing is, if you need capital to survive, then it's a no-go.
Okay, you know what? We're going to take a short commercial break, but on the other side, we will tell you about some lessons on how to invest right and stay invested, and more importantly, how to identify some new winners from this Samvat to next. Stay tuned.